Good morning, everyone, and welcome to Weekly Profit Talk. We do this each and every week, a Wednesday at 8:30 Mountain Time. That is 7:30 on the West Coast, 10:30 on the East Coast. Good morning, welcome. It's time once again for Weekly Profit Talk. Let's talk this week about how a fractional CFO puts your practice on a care plan. Now, there's a non-standard financial side of your practice, and this is really not your fault. The business side of your practice does require some sort of a plan as well. It's not your specialty, and nobody ever handed you a care plan for it. We've discussed this in previous weeks, but it bears saying again. You go through 10 years of pre-med, higher education, and residency to learn how to be a clinician. Nobody teaches you how to be an MBA, okay? And that's fine. You see your tax professional annually to discuss a year that ended in December. Sound familiar? The visit is thorough, the paperwork is correct, and nothing about the outcome can be changed because the treatment window closed a few months ago. This isn't advice. This is an autopsy with slightly better formatting. Okay. Now, what a financial care plan actually includes. I'm going to spend a few minutes on this. Comprehensive Client Advisory Services, also known as CCAS, is a accepted term for a level of accounting that goes above and beyond the mere compliance for books and taxes. Now, you might imagine somewhere along the line, you got the idea you have to keep a good set of books. The reason is that you need to know exactly how much you're spending, how much you're taking in, what your receivables look like. Claims receivables are the bugbear of any medical practice because you can have primary, secondary, even tertiary insurances, co-insurance, co-pays. There's all kinds of ways that doctors get paid, and if you get full payment for a date of service within 53 days of that date, you're doing extremely well. So it's unlike other businesses. Now, comprehensive client advisory services, think of this as business advisory. It goes beyond the categorizing of transactions that have already happened and of filing taxes for a year that's already transpired. And it takes you into the present and the future and gives you a scoreboard to make decisions off of. It is continuity of care applied to your money with solid rhythm and the guidance of someone who actually knows the chart. I like to think of this as a basketball scoreboard hovering over the floor. If you look up and three-quarters of that is completely dark with no lights, there's a lot of information you don't have. You may not know the score of the other team relative to your own, how much time's left in the period, how many timeouts are left, how many fouls. If you don't know the whole scoreboard, you have difficulty calling the play. And I love that allegory because it makes sense. So let's talk a little bit about this continuity of care and what this entails. One thing, weekly meetings. Um, you're basically taking business vitals often enough to have comparative analysis and make data-driven decisions. Decisions get made against current numbers instead of a hazy memory of the previous quarter or your gut feeling, which is even worse. When something moves, you know about it within days, not within seasons. Next, a rolling 91-day cash flow projection. I arrived at that number simply because it's 13 weeks times seven. Okay. So it's basically a quarter. 91 days is my own unique thing. And I believe that having an idea of what your cash flow projection looks like 91 days into the future, again, helps you to make data-driven decisions. Payroll is a weekly problem, and profit is not the same thing as cash. Um, this 91 days will tell you exactly what'll be in the account when you have that payment come up, or if you want to make a hire of a new higher level provider, capital improvements, that sort of thing. It's the difference between managing your cash and being surprised by it. 1 year profit projections. So what this basically looks like is a profit and loss statement, except 12 months into the future. Think of it as a budget. It's a long view. The practice lands if nothing changes, refreshed as the year actually unfolds. You stop making six-figure decisions on the instinct in the evening, in a spreadsheet that you put together yourself and you don't completely trust. That's the difference between that and having actual professional guidance. Monthly tax deposits. Now, you are going to owe tax if you run your own business. It's plain and simple. Even if you're an S corporation, you might be saying to yourself, well, yeah, I pay myself a wage. There's a withholding coming out of that. But the reason you're an S corp is that you want to pay yourself a reasonable salary, which is the lesser of about half of all the money you make. Or if you're doing well enough, what the market would demand your cost would be to replace yourself in your position. So say you're a high-level neurologist and you're worth about four or five hundred thousand dollars. Well, you're not going to pay yourself that much as a wage if that's all you're making for the year. So a reasonable compensation in that case would be about half of that. But if your practice is now pulling in about $2 million net, you can stop paying yourself at reasonable compensation um, as far as replacement salaries go. Let's say that's 480K in your zip code, and that other $1.5 million is money that you only pay ordinary income tax on. Um, More on S corporations in the future, but it's definitely the way to go. Lastly, quarterly tax planning and projections. Let me touch on monthly tax deposits again. Wait a minute. These two things actually go hand in hand. Uh, you want to basically plan for your quarters because you have to make estimated tax payments four times a year. Unlike your wage withholding, which happens at every single pay event, and you're paying in your FICA and you're paying in the company's half of the FICA as well as your own federal. And if you're in a state, like most of them that have an income tax, you're doing that withholding as well. Even unemployment premiums. So that happens with each pay event. Quarterly tax planning and projections means that you're going to have estimated taxes if you're going to owe over $1,000 in tax after all other overheads, including your own wage. And if you're a decent physician, you're going to owe over $1,000 in tax. So you need to make estimated tax payments. These payments land on April 15th, June 15th, September 15th, January 15th. Happens every year like clockwork. Now, where the monthly tax deposits come in is if you have a pretty good grip on how much money you're going to owe in tax, you should be setting aside this money each and every month in a savings account. You can make estimated tax payments to the IRS and pretty much any state government with an online portal, which is, again, pretty much all of them, straight out of a savings account. By doing so, especially if you pick something with a high yield, this is a personal expense, so it's not a business savings account, by the way. You want to put this money into personal savings, okay? Just call it tax savings. Don't do anything else with it. Don't borrow from it. Don't take your kids to Disneyland with it. This is just for taxes. And then each quarter, as you accumulate this money month by month, you make your payments from it. The idea is that when you file your taxes next March or April, you should owe less than $1,000 to both entities. If you owe more, you did something wrong. If you say, but I'm doing everything right and it still happened, th that's where good guidance comes in handy. So, and that's what we're talking about here. After a year under continuous care, you're going to know your numbers without opening multiple logins on websites. You're going to be able to make a hire in March based on data, not gut feeling. You take the distribution in August without wondering if you should have. Okay. This is important. Talk about bank balance accounting. You look at your checking account, there's 5,000 bucks in it. You need 1,000. It's like, well, I've got enough. You may not. For one thing, um, if your cash overheads are about 20 to $30,000 a month and you only have $5,000 in there, that's too low anyway. So you shouldn't even be touching it. But the point is this, um, you should know that you have the cash to make and take the distributions, and you should take those monthly because you're earning the money and you have a right to spend it, and you are going to pay tax on it. Another thing is you walk into a lease negotiation already knowing your ceiling. Okay, you're completely armed with data-driven um, decision-making power. December is uneventful, and a boring December is not an accident. It is the ideal goal outcome. So what's your next move? You built your practice on a simple conviction, hopefully. Ongoing care produces better outcomes than an annual visit. Ounce of prevention, pound of cure. Old cliche, but you know that's what you want for your patients. This is doing this for you and your fiscal health. You have never once doubted that principle when it applied to a patient, so it's time to apply it to the business that supports every patient you treat. Let's start with a tax planning analysis to see where your practice actually stands today. That's a conversation with me directly about what continuous financial care would look like for your practice that you spent some portion of a career building. Your patients get a care plan. Your practice deserves one too. Now, as far as that conversation, quite simply, this is all you need to do. You're watching this either live or in replay on one of three media. If you're not on YouTube or LinkedIn, then you're on Facebook. Uh, the thing all three of those have in common is you're able to make a comment under the video. So go ahead and do that. Say help or conversation or free call or get a hold of me, say something funny, but get our attention and we will reach out to you and we'll let you know exactly how to book that first call. We call it discovery and it's absolutely free. First call is no obligation. We spend 30, 45 minutes getting to know each other a little bit. I'll ask you some questions, see if it resonates to work together, and start getting you the kind of guidance that will put tens of thousands of dollars of excess taxes back into your business, as well as save you tens and thousands of dollars in cash flow as well as profit. So these things are all possible, and all you need is a decent guide to help you with it. And let's talk about it. So, with that, I hope you're having an amazing Wednesday so far this morning. Thanks for sticking around and listening to this point. We will be back next Wednesday at the same time, 8:30 Mountain Time, for more weekly profit talk. So until then, have an amazing rest of your week, an awesome weekend. Stay cool in this heat wave, by the way. And if you have a chance today, do something randomly kind for a stranger.